Hey, what's up, my YouTube fam? I'm back. This is Lad with Invest and Build Your Credit and Wealth. And today we're going to just be talking about stocks you should be investing in now going in 2021. So first, the disclaimer, I'm not a financial advisor. I'm just giving you my opinion on the stocks, things I'm investing in my portfolio. You have to do your own due diligence. You have to do your own research. It's very important not just to listen to me or anybody on YouTube talking about stocks. Be assured of what you are doing. Follow up on the information that you get through. I'm not going to take it personal. I want you to go and invest. I'm telling you, invest. Because anybody I listen to, I'm going to go do my research. I'm going to go and do what I have to do. Am I going to be putting my money in the right stocks? It's going to be right for me. So do that. I did it for all y'all new investors out there. I did another video today just kind of giving you some information to beginners on what to do, how to look at, how to evaluate stocks. So go to my videos that I just posted. A lot of great information to help those new investors that want to get into investing but just not sure what to do. So check out my other video. Hey, today is a good day. We're just going to be talking about some stocks that I think are great that you want to invest in. I also want to thank all my new subscribers coming to the channel. Hey, I appreciate you for hanging out with me. Please subscribe to the channel. Please hit the thumbs up. Please hit the bell for notifications so when I post videos, you'll get notifications of the video. Hey, and let's grow this wealth together. I'm also going to show you my portfolio at the end of the video, so stay tuned to the very end. My portfolio took a little hit, because November was crazy. It was going out the roof. I was like, oh my gosh, it's just going up. And then here come December, a little pullback, But that's the stock market. The one thing, don't get so afraid of the stock market. The stock market doesn't always go up. It's taking great evaluations of stock and then sometimes being patient in the stock market and just making sure. Every new investor, I tell them, go do a research of the S&P 500 from its inception until now. And you tell me how many years the S&P had a negative, where it was negative in returns that year. Do that. And then come back and tell me that you can't make money in the stock market. I tell every new investor that. And then they come back and be like, oh my gosh, I can't. Every year, it's always an increase coming out of the S&P 500. But it's all doing your due diligence, doing your research, and investing in the right companies. And then hopefully, boop, you hit that home run on the stock. There's some stocks out there people hit home runs on all the time. So that's what you got to do. That's got to be early to the party. Everybody, when I tell you can't be late to the party because the food gone, drinks gone, people tired and the party's dead. But you get there early, everybody's hyped, bunch of food, bunch of drinks, and you can enjoy yourself. Just like the stock market, got to get to the party early. So this is a party you need to get to early. Let's start off with number one, Airbnb. It's the IPO date. It's December the 9th. Today is December the 6th, which is Sunday. So he's talking about 7th. So Wednesday, that's going to be a big day. So many people are going to be talking about that. So it's best, if you're going to be getting into this stock, you need to get into it really early because this stock will run up. I'm telling you, it's a hype stock. So many people want to get into this stock. So many people have been talking about it, not just in the YouTube community, but CNBC, a bunch of different stock resources that talk stocks. Everybody is talking, a lot of analysis are talking about this stock. They think it's the next big stock. So be prepared. You better get into it early. Don't be playing around. You know what I mean? Because I know when there's some stocks that came in and next day I look at it and ran up like crazy, I got in late. Even when Tesla, when they did that split and then everybody started buying into it. Like if you didn't get into it early, oh my gosh, then it just ran up. And then what happened? It pulled back, way back. A lot of people were suffering, but we were just waiting until it hit the S&P 500. I was one of those people. I kept trying to get into it, couldn't get into it. Stock was steady rising up. Every time I put a bid in it, stock that was going up again. So it was crazy that day. So just be prepared. I have a better game plan this time than I did with Tesla. And then when I did get into Tesla, the next thing you know, it pulled back. So that's the other thing I want to tell you. This stock is going to pull back, right? So if you don't get in there, you see that price is getting a little bit too much, don't sweat. Don't panic. It's going to come back. I say wait about between 4 to 8 weeks, or watch out and see when did that stock starts pulling back, so you can get back into that buy zone, so you can go ahead and smash that Airbnb. But I think it's a great stock to invest in, and I think you should get into it. If you don't know what Airbnb is, Airbnb is like hotel. People travel. You call, you make reservations, you can stay, you can rent houses, apartments, condos, beach houses, everything like that. And they're really nice. I mean, shout out to my cousin Stan. Stan has an Airbnb in San Antonio, Texas, that every time I go back home to Texas, I call him up and say, hey Stan, man, can you got some availability? Yeah, he'll let me know. And yes, I book it. Great place to stay. It's a new thing. Something I'm even looking to next year. I'm getting into real estate and looking into even maybe purchasing some places where I could change into an Airbnb. So it's a lot of things going on. So make sure you understand. Again, it's a great stock. Do your research on it. Look it up. The next one we're going to talk about is MP Materials, right? I did a video on this stock a while back, but it was still a SPAC, right? And you go in, I said you would 20x your money on this, and I believe it. I'm a big investor in this company, and I'm a little bit mad at myself. So I'm going to tell you, patience is a virtue in the stock market. Don't panic. You panic and sell, you're going to make a mistake. And I panicked and sold because this stock, I had 90 shares and I sold them at $11. I think it was like $11.13. And I ended up getting back in at $13, but at $11, I figured out, how much money I kind of blew when I did that. And it was crazy. So, for example, I had 110 shares. That was at $11 all the ones I had. So I sold 90. So if I would have kept them at $11.17 at 110 shares, so I lost profits around $1,228. Like, just because not being patient. Not because the stock ain't moving in the direction I want to do. Even though after I believe in the stock, I got impatient. Plus, I was trying to move things around in my portfolio and say, I'll get back into it, and then kind of took my time about it because there was other things in the stock market. Things just pop up and makes you want to just, man, I need to get into the stock. And the next thing you know, a stock you meant to get into, you kind of wasted time. But it's definitely one that I like. We're going to talk a little bit about it. And let me tell you a little bit about it. Rare Earth Materials is what MP Materials is. Their net income was $14.6 million. Their revenues in the third quarter was $41.2 million, and that was a 52% increase year over year. Now they are estimating a decline in the fourth quarter and a drop to about 38.8 million, but we haven't got their revenues yet for the fourth quarter, so we have to wait and see on that. But why did I get into this stock? So with Rare Earth Materials, Rare Earth Materials is really important to our national security, right? China controls 80% of the world's rare earth materials. Look it up. They control it. And the United States Congress and the government is understanding that we cannot allow China to have that much control over something that is so critical to our national defense. So what happened is our Congress put in a legislative proposal in May of this year that would raise the spending cap under the Defense Production Act to enable the government to spend $1.75 billion on rare earth elements and munitions and missiles, and $350 million on microelectronics. So you definitely, this is a stock. This is why it's important to me to get into this stock, and I'm smashing it. I'm always buying this stock. I'm not gonna stop buying it. I'm gonna keep buying it and hold on to it. You know, if I see something drastic that happens, then yeah, I may get out of it. But right now, every indicator is saying this material, this is vital. And this company that I'm investing in is here in California. It's in Mountain Pass, and they already have been producing rare earth minerals. But you know what they're doing with the rare earth minerals? They're sending them to China so China can process them, and then they're sending them back. And did you know the government is not even putting a tariff on this stuff, right? Because this is how we don't want to put a tariff on it. We need that. So we're not even going to put a tariff China. You can send that back for free. So that's why this stock is so important, not just to us, but it's important that I think this stock, because of the amount of emphasis the government's putting on this, and at this company, MP, that has this mining facility. What's so great is now they're going to be processing the rare earth minerals right here in the United States. So do your research on it. It's something I'm definitely investing in, something you may want to look to invest in and add to your portfolio. You know, kind of a brief recap. In 2020, they were negative up until the fourth quarter, because earnings haven't came out for the fourth quarter, negative 0.34 cents. They're estimating that in 2021, they're going to go from a negative 0.24 cents earnings per share to 24 cents earnings per share, right? So, and they're looking for sales to increase 38.62%. So, and then they're looking at it go in 2022 from 0.24 cents earnings per share to 0.49 cents earning per share. And that's an increase of 103% year over year, right? So company I'm definitely looking, I'm investing in, and I'm going to continue to invest in, and it may be something that you want to look in. The next one we're going to talk about is Riot blockchain. So as y'all know, cryptocurrency and Bitcoin has been on the rise. Why is it on the rise? Because the dollar is on the decline. Anytime the dollar is on the decline, cryptocurrency starts to creep up. And it's going back to where it was in 2014. And I think everybody should have some. I haven't invested in any cryptocurrency, but I am going to invest in, and I've been doing my research on where I want to go. I think that's another area that you can solidify your portfolio and diversify your portfolio with some cryptocurrency. And a lot of millionaires that didn't believe in cryptocurrency they're all buying cryptocurrency. So look at the trends, look and see who's doing what. I just pay attention to a lot of different things and make determination on, is this something I need to get into? And it's definitely something. But Riot blockchain, I got onto this stock at $4.88. After hours, the stock is trading at $10. So I've already doubled my money. I believe this stock is going to continue to rise. Year over year, Riot is up 657% year over year. So what is Riot? It is a mining company for Bitcoins. There are to be a large cap Bitcoin mining in the future. I think as Bitcoin becomes more and more popular, and more and more people are going to get in, mining companies are going to be more and more profitable, and these stocks are going to continue to increase. And I like this Riot blockchain. There's some other ones out there. There's one other one we'll talk about that's really doing, that's doing well. A little bit more pricier than blockchain, but doesn't mean they're not a great company. They are very good. Bitcoin mining company. So let me tell you a little bit about it. Riot blockchain has the potential to become the first domestic large cap Bitcoin mining here in the States. That's another great thing about it. Ride specializes in cryptocurrency mining with a focus on Bitcoins. Ride also has investments in some private blockchain technology companies. Over the last year, Ride significantly increased its mining capacity by buying more mining. So Ride continues to maintain a no long-term debt. That is key. Ride indicated that all their new mining purchases are being funded with available working capital, which is another positive thing. Not carrying any debt, and they're buying minings with working capital they already have, which is great. So this is another company that I'm investing in heavily. Now, I didn't sell none of their stock, but I'm definitely investing in Riot. Another stock that I think is another great buy, and it's a very valued stock, is Dropbox. Dropbox is a part of the cloud. Right now, it's trading at $20.35. There's a lot of rumblings out there about that Dropbox is prime for somebody to buy them out. You know who? We don't know, but a lot of people, there's a lot of rumblings out there about Dropbox, and is about them being bought out. So, but I mean, Dropbox it's a cloud space company, and that's where we're going. If you're paying attention with technology, people will want to put more information in the cloud and get rid of those big servers that'll be sitting up in somebody's room or somebody's office or some back in office trying to maintain all that information. More and more companies are buying cloud companies, or not purchasing cloud company, but using this service to store their information. And blockchain is a cloud service. So I think it's a great stock to have. It's up about 0.59%. But this is a stock that I've already invested in. I'm going to continue to buy. I think it's a great value, and I think it's a stock you should be adding to your portfolio. So do your research on it. Dig down. I'm covering a lot of different stocks, so I'm not going to get deep down and do a deep dive. If you want me to do a deep dive on one of these stocks, just shoot me a message. Say, Larry, hey, can you do a deep dive on it? And we'll get busy and do a deep dive. Another stock that I think that you should be looking to invest in is Polar Power. Ticker symbol POLA. I got into this stock at $1.90. It's trading about $4.48 a share. The stock year over year is up 94.78%. Can't get no better. Better than this. You just got to get into it. And let's talk about it. Polar Power has a little space in the 5G, which is good. That's going to become bigger and bigger as it starts being implemented. You'll see a big difference. 5G is really going to be big, and it's going to be surging, and could be the catalyst that the stock needs to surge. So I'm in early. I'm continue to buy. I have over 100 shares in that stock, and I'm I'm about to hit over 200 shares in that stock, and I'm gonna continue to be buying out that stock. I believe in that company. So Polar Power is a micro cap company with a market cap of about 46 million with favorable financials. The company produces direct current situations which have trending due to the telecommunication revolution and the renewable energy growth, among others. A significant amount of Polar Power revenues come from installing energy backups to cell towers, and more cell towers are there, the more will be Polar Power. The more Polar Power will have, and the more they will grow because of that. Polar Power has just been doing well. It's been kind of trading sideways for the last since July. If you look at the resistance and the support levels, kind of trade. I'm just waiting to see when this is gonna start break out. But right now I'm still in the buy mode, buying. and we'll just see where it goes. The next one is Cloudflare, ticker symbol NET. Hey, this stock has been on a tear. I got into the stock at $53.49. It's up to like $77 now. Cloudflare is well positioned to be a leader in the edge computing, which is likely to be the next large wave in computing, right? So like I said, cloud space. These cloud space companies are great companies that you may want to look in. There's a number of ones out there. This is one that I'm definitely looking into. Actually, I've already bought shares in it. Again, like I said, I got into it about $53, and it's on a tear going up. It was trading sideways, and now it didn't broke out, and now I'm looking into even purchasing more shares of the stock. The Cloudflare has a large consumer base and a broad product portfolio, which has yet to be fully tapped, providing a large growth opportunity. So if Cloudflare can continue to attract large customers, they are likely to reward shareholders with strong returns in the future. So again, I'm definitely loving Cloudflare. I'm definitely going to be buying more and getting into it. So it's great. The key market continues to address by Cloudflare platform include VPNs, internet and external firewalls, web security, distributed denial of service, intrusion detection and prevention, application delivery controls, content delivery network, domain name systems, advanced threat prevention, wide area network technology. So that's pretty much what's going on with some of the networking that Cloudflare does. One of the most promising features marketed that Cloudflare, it is a global network that is addressing the edge data center market, which is and I can tell you that the Cloudflare global network coverage is worldwide, right? So I'm gonna put a picture of it up here so you can see it, but it is definitely worldwide, and it is a company I'm definitely gonna be continuing to invest in. The next one is one of my favorites. I tell everybody this should be a part of your portfolio. They have a great CEO. It's AMD, Advanced Micro Devices. I got into this stock at $74.97. Stock it has broken out because it was trading sideways for a while, and now it's up to $94.04 a share. Some other news is about them acquiring Xilinx, and I think that's definitely there's mixed reviews about what it could do for MDN, but most people are really happy about this merger that's going to be taking place. It is a all stock deal that they're buying this Cloudflare with. So Xilinx with. So it's going to be a great company. So I'm up like 25.40% on the stock. Year over year, the stock is up 136%. So it's definitely doing. With the incoming deal that requires Xilinx, it appears that the stock will be headed to over $100 a share. That's why I'm still buying. The chip company had a blowout third quarter earnings reporting, initially overshadowed by the deal, right? So great company to be into. Do your research on AMD. I'm definitely investing. Got quite a few shares in there, and can continue to invest in this company. The next company, JP Morgan Chase. This everybody know JP Morgan is the largest bank in the United States. I'm definitely going. I really like the company. I really like them because, first of all, they're the largest bank. They're not going nowhere. They're in the S&P 500. They have a dividends that is a dividend yield of 2.90 with a annual yearly payout of $3.60 per share. So I definitely, why am I getting in this stock brief? Because I just, first of all, with interest rates being down, the banking industries have suffered. I mean, you have forbearance, you had servicers, people in forbearance services are still paying mortgage payments. The Feds didn't drop the interest rate, so banks had to drop their interest rates, which means the lower interest rate they're not making as much money on. So banks are taking a little hit right now. But listen, as we come out of this pandemic, and I tell clients in my credit, that I have clients in my credit repair business, hey, you should be positioning yourself and getting your stuff right for you to purchase a house. These interest rates are all-time lows. If you're not trying to be getting your stuff together to purchase a house, you are making a great mistake, because interest rates are all-time lows, down in the 2%. I mean, I've read articles like low twos, like 2.25. Like, that's crazy, especially when you're purchasing a home. So if you're not doing what you need to do to definitely position yourself to buy a house, you're doing yourself a disservice, right? But back to it. But as we come out this pandemic and people go back to work, I'm telling you, the economy is going to be on overdrive. People are going to be traveling. People are going to be shopping. People are going to be eating out. People are going to be everything. People are going to be going back to work. People are going to be able to start buying things because they wouldn't be able to buy. What's going to happen? The Fed is going to say we're in overdrive. We need to slow people down from spending all this money. So what happens? Interest rates start to rise. Then they start raising interest rates. And what happens when interest rates starts coming up? Banks start making more money, become more profitable. So this is definitely a bank that I'm looking at another bank. I'm not sure if I want to do Bank of America, but I'm really doing my research on one other bank that I'm going to invest in. So definitely, this is one that I haven't got in yet, but it will become a part of my portfolio in the next couple weeks or so. I am going to be doing a large investment in the next couple weeks before the year's out. I want to drop some in there, because my goal is to have in my 1 year mark anywhere from 25 to 35, maybe $40,000 in 1 year invested in my portfolio. So I have an aggressive plan, and that's what I'm going to be doing. The next one, a lot of people are talking about is CIIC merger. So, hey, great company. It's a merger. A lot of people are talking about it. It's another EV space that is getting into commercial vehicles like buses and all that. I have a video for y'all to watch a little bit about what this company is all about. So take some time, check out the video.
It's rather than trying to, fight with Tesla for a piece of the consumer. Electric vans are low-hanging fruit for companies that want to get credit for protecting the environment. And these days, that's a lot of them. They want to meet all these ESG targets that are very aggressive. Meanwhile, when you see Hyundai and Kia putting their money on the line in something like this, that's very encouraging. When you see UPS ordering thousands of vans, well, that'll make a terrific case study. And we know UPS is serious about going green. Even better, Arrival's a British company with a distinctly European vibe. That's a big deal because Europe is way ahead of the United States when it comes to enthusiasm for electric vehicles and mass transit in general. Finally, let's talk valuation. And this is what I think is going to have a lot of people upset, and it's going to take a leap of faith, except for the younger people who don't even want to listen to what I'm about to say. Arrival's merging with CIIG. Okay, that's the CIIG merger. And if the company can come anywhere close to meeting its projections over the next few years, the valuation actually seems pretty reasonable. With CIIG stock trading at 21 and change, that translates into about $12.4 billion valuation for the combined company. Given that Arrival's talking about doing $5 billion in sales for 2023, well, that would mean the stock's selling for 2.4 times sales in the out years. Nothing crazy about that at all, as long as they hit their targets. Of course, that does require a huge leap of faith. I think there's more reason to believe in Arrival than most of the other electric SPAC plays. But at the end of the day, this is still an early stage company. It's still speculation, okay? A lot of things could go wrong. I'm telling you this because I don't want you to be disappointed if the stock suddenly goes down $10 in a day, because you're thinking about longer term here, the bottom line. As much as I like this story, I think you can be patient. Arrival won't even merge with CIG until sometime in the first quarter of next year. And you almost always get a better entry point with these SPAC deals when you wait for the stocks to come in. That's why I'm saying it's speculative and you could get a big drop here. But given how much this one's already pulled back this week, I'm giving you my blessing to start picking at it tomorrow. Then I want you to wait for maybe a better pitch. If it comes down below 1750, you can buy it hand over fist, because this one has the best claim to be the son of Tesla or daughter to break the tyranny of that awful.
We'll take you through how we do that. We'll show you the products, we'll show you our components, how we get the cost down, and how we increase the innovation in the vehicle. And we'll show you our robotic cell, which is one of the enablers for the microfactory. And you'll also get a first look at our composite plant. One of the ways we drive our costs down is through the use of these pioneering microfactories. So all of the technologies are designed upfront to be assembled using a low footprint, low capex microfactory. What's important about these microfactories is they can be deployed anywhere. You don't need any special buildings, you can use existing warehouses, and you can convert them to production plants very quickly. So this is actually a fundamental change to the way the industry is currently working, which are these large central factories. Ours is a distributed model, but what's key here is that everything is designed upfront to be assembled using these. And what's important is all of that passes through a software loop to validate that the microfactories can build any of our products. We have hundreds of people working in our robotics department creating these flexible robotic cells. And these cells form the backbone of the microfactory. In a typical plant, you have an assembly line, and if there's any change to the vehicle, you actually have to change the line, which is significant capex and time. In an Arrival microfactory, using these flexible cells, we're simply able to reprogram the order that the vehicle goes to each cell and the operations of the cell itself, and we can actually produce different variants. The benefits of this approach is immense. A typical factory will use thousands of robots to do production. At an Arrival microfactory, we use 70. Robotics have been used in the auto industry for a long time, but what's different about Arrival's approach is the flexibility that we have. So instead of pre-programming all the robots to operate in a certain way, we're able to configure and use computer vision to actually produce freedom in the cell. So for example, what I've just done is place the part randomly on an autonomous mobile robot. And this is actually pretty significant. Instead of having to be precise in terms of where all the layouts of the parts will be for the robots to understand their process, I'm able to basically put it anywhere. And we use computer vision for the robots to track and perform the task. To enable the cost saving and the ability to produce our vehicles using microfactories, we have designed all of the components in-house. We're vertically integrated. So it's the hardware, the software, the robotics, it's all done within Arrival. And what you're seeing here is the type of components that we're building. So all of the high voltage and low voltage systems we design in-house. So that includes our modular battery, our BMS, traction inverter, DC-DC converter, human machine interface. These are all actually done within Arrival. Designing these in-house also enables us to upgrade the vehicle over time. So for example, with our HMI system, the human machine interface, if there's ever new technologies that come out, we're actually able to replace this component with the later version. That means all of our vehicles are also autonomous ready. Right now, the autonomous hardware cycle is on a 12 to 18 month refresh cycle, and the existing vehicle architectures can't deal with that. With Arrival, we're able to swap in and swap out those technologies as they become more mature. This approach prolongs the life of the vehicle and also saves the commercial vehicle operators cost in the fact that they can reuse the same asset and upgrade it over time. We're here in Arrival's composite factory, and what you're about to see here is one of the ways that we reduce the cost of an electric vehicle to help become competitive with fossil-fueled ones. So to do that,
right, I know you checked it out. We're going to finish up with a couple of other stocks that I think you should be getting into. I'm getting ready to look into my things that I think you definitely should be looking to invest in. So let me get on down and give you a little insight on things that I think. We talked about SBE. I think that's another one that you should get into. A lot of pullback in the stock. I think there's an opportunity for you to get into it. It's trading about $33.40. SBE Switchback Energy is which is Charge Point, which are going to be charge stations for EV cars. I think that's another one that you really should be looking into. Tesla is another one that's been entered into the S&P 500. I'm telling you, Tesla, you should be getting into this stock. This stock will be, my prediction, in the next 6 to 8 months, this stock will be anywhere between 650 and 700 a share. So I think that NEO, you definitely should be trying to. It's been a great pullback for NEO. NEO after hours is trading about $42. I'm really kind of waiting until it gets back down to about $39 before I get back into it. But I just want to see I'm just kind of waiting to see how that flows out. That's another one. XPeng is another one. It got way up there, and I was telling people, hey, you should not be buying this stock at that valuation. No, ma'am, don't do it. But it's pulled back to about $49. I'm still thinking that's still a little pricey for me, so I'm kind of waiting to see if I can get it, if it would drop down a little bit more pullback. I'm looking more around $45, so we'll just have to wait and see. Another one that I think that you really should be building out your portfolio, and I definitely have been, is VICI, ticker symbol. It's a great stock. It is all about gambling, casinos, hotels. They're all over the United States. And again, as we come out this pandemic, people are going to be traveling, because I'm going to Vegas. And I got me and my wife, we're about to pack our bags, head to Vegas and have a good time. So as soon as we can get out of here, we're definitely going to be taking a trip somewhere. So I believe this stock is going to be another stock that's going to be good, and they pay a very good dividends. So you definitely want to get into that stock. And that's another one that I'm recommending. But again, do your research. So I'm very happy with that stock. And it's been kind of trading sideways, and it has a dividend yield of 5.09. Their dividend growth over the last year has been very fast. It's been up to 17%. It's been on a tear. Payout per share is $1.32 annually. So, those are the stocks I'm looking at. Those are the stocks I think you should be investing in. I have some more that I think you should go into. But hey, remember, December the 9th, you got Airbnb that's going to be hitting the New York Stock Exchange. Be prepared when you go to it. And hey, I appreciate you hanging out. Appreciate you coming out and hanging out with Larry during this time. And going, if you have any questions or anything about stocks, you want me to do a deep dive on any of these stocks, just hit me in a message. Say, hey, Larry, I need you to do a deep dive into the stock market. So I appreciate you. I appreciate that all you do. And you take care. Oh, that's right. I said I was going to share my portfolio. Didn't cut y'all short. I need to get back on the game. So let me do this. Hit performance. So we're going to go back the last month, even though with all the downturns, I'm up 13.14%. And all this stuff is posted. 3 months out, I'm still up through all the pullback, 39.83%. 6 months, I'm still up 46.80%. And year to date, right now, I'm up 79.97. And hey, this stuff is up. You can see it for yourself. But that's where I'm at. And then all together, my portfolio took about an $800 hit because I was over 14,000. Now I'm down to 13,203.52 cents. But I know there's going to be a nice little turnaround. Plus, I'm getting ready to make a large investments on some really good stocks I talked to you about, so I can continue to grow my portfolio. So again, hey, subscribe to the channel, hit the like. If there's anything that you want me deep dives on any stocks I talked about, shoot me a message and I'll do a definitely deep dive about this stock and just kind of talk about it, see if it's something that that changes your mind and make you want to invest in that stock. All right, cool beans. I appreciate hanging out with y'all, and Larry is out the door. Y'all have a good week. I'll be back with some more videos real soon.